this entire year is going to be filled with a mix of emotions for you. Right now, you're excited, okay? And that's understandable.
Welcome back, guys. Good evening. How are you all doing? And I understand that today is bank holiday, and in the grand scheme of things, we are really not. I'm really not supposed to do this content, but I am doing it because I feel like there is a message that can also be passed because of the trust you have given to me and all that. And I'm not really in the mood of creating this thing today, but I have I had to do it because it's a daily something that I must do and I had to do it. Yeah, as long as I'm physically fit, as I'm mentally okay, irrespective of the mood I am, I have to do it, right? So that is the law abiding this. Because it's actually after doing this video, I will still, prepare more myself more for tomorrow. But this is our daily market review on Euro US dollar and what the XY. So I'm going to jump right into what we have and what you are saying. Well, today this what you are the chart you are actually looking at right now is the Euro US dollar daily contract for February 19, 2024. And I have a short statement here. Like the Euro US dollar daily contract for Monday 19th February 2024 did not have enough volatility. Since today is bank holiday for US dollar, but we can still lay some conclusion in price with the little range offered in price today, meaning that we can still come with a conclusion, or we can still lay some facts that price display today, no matter how the range is, there is still a fact in the price today. So I am indeed pleased to see it swept, like I'm pleased to see today price swept Friday high, which is the buy side liquidity, and retrace back into the range, and also creating a sell side liquidity for tomorrow price delivery, which is the low of the day. Now casting forward, I am anticipating to see tomorrow Tuesday price lower and sweeping below today low, sell side liquidity, and pricing into the daily inversion fair value gap as an institutional order flow entry drill, which is also likely to be the low of the week if market is willing to give a perfect weekly bullish profile. Now also we have three PDRA, or three previous day high, that is on 12 February 2024, 13 February 2024, and today 19 February 2024, candle high as a potential draw on liquidity, which is we have this high, after this high we have this high, after this high we have this high, which are all previous day high sell side liquidity, buy side liquidity that we are looking out for. And I also mentioned earlier that I want to see market price below today low, and then give us an institutional order flow entry drill. That means we just tap inside this and we did not stay too long inside this fair value gap. We just punch it and we go. If price really want to come to this era, it will make a whole lot of sense if we can deliver, right? If price could deliver into this area, right, to engineer smart money liquidity to go higher. Then when we price into this level, we are supposed to be looking upward. So our draw on liquidity tomorrow is buy side. But initial, we are looking for previous day low, sell side, or this buy side. So why we should focus only on the buy side is that The market might really not give opportunity for sell side. We might just open, retrace a little bit and start going higher, right? So it's sometimes I do call a particular area as a focus that we might, doesn't mean that we have to, right? So we might clear, the market might come below this area. Well, if it come below this area, it makes it more effective for higher prices. Otherwise, if we continue to go higher, there's a potential reason that we're going to see market retrace. That is, we're going to see the market go higher, price above this buy side, then retrace back into the fair value gap before going, right? But if we currently we price into the fair value gap and we go, there is no longer reason to come back here except there is a new PDRA that is formed for price to also, retest to and use and obey, right? So that's just the two scenario that is likely to happen in this market. So this is the XY, which is the dollar index daily contract. We can also see there is no much volatility on the dollar index, right? So and we also want to see tomorrow price above this high, which is today high on DXY, and price into the fair value gap, right? Or the consequent encroachment of this particular candle before going lower. If we did not have that, then if we have something like this, then there is a reason we have to retrace before continuation. But if, oh sorry, but if we did retrace before going, then that is going to be more empowered than any other ways or any other move. So we're going to respect that move more. So tomorrow I'll just ask, if you go on your lower time frame, you need to be watchful about what the price is doing, right? Before you engage. Also, don't forget that there is a volume imbalance here, right? There is a volume imbalance on the daily price. You can see how we have been using that area. So my own is that if we price below this volume imbalance, right? Let's say we open and we price below it, we are going to use it as a support or a resistance to go lower. Meaning that we price lower, we're going to come back to it before going. So it's a very effective. You can see it's very effective because you can see how price is sitting on it, right? So that is it basically for the daily contract on, on the XY, which is the dollar index. So let's go to the hourly contract. So this is the 4 hourly contract for Euro US dollar. So we have this swing low, which is created today, and the swing high. So overall, we are looking for buy side, right? So if the market did not show willingness to come below this area, then we can also project to go higher. We can find any smaller time frame PDRA that, or any print or footprint of price that respects for higher prices, and also that respect the time of the day which we want to trade on. So I have this statement here. The Euro US dollar 4 hourly contract shows the internal range consolidation of today price, which creates or engineer liquidity in both buy side liquidity and sell side liquidity. Meaning that on the 4 hourly we can see the pure range, which is this high, this low. It's a range, right? You can see how pure the range is, which creates that range creates a significant price, and also we want to see if price trades below one. Since we are looking for the upside, we want to see the sell side taking before the buy side, right? So that is it. But if we see buy side taking, well, maybe if there is any PD array here, we might likely consider that one. Or if this particular leg become an order block, which is not going to be a order block but a proportion bullish proportion block, right? So that is it basically for the Euro US dollar 4 hourly contract. So this is the 4 hourly contract for the XY, right? So we have our overall sell side liquidity here, and we have this sell side liquidity to look out for tomorrow if we get taken. And also, before we finish this video out, I'm going to emphasize on the news we have tomorrow. Then we have this. So currently on the 4 hour, it's not showing us sign that it's willing to come here before coming here. So that is why you should be more conscious about price. And also, we have a volume imbalance here, which might not let price to go lower. So you see that volume imbalance, you see how we respect that area and we tracing back. So it might not give room for price to go into this payday array. So if we did not go above this high and we start continuing lower, it's going to be full star, or it is going to be engineered by this volume imbalance. So that is it basically, and I hope this is giving you an insight on what to look out for tomorrow. Finally, we have come to the hourly contract, and I have my statement here. The Euro US dollar for hourly contract shows, sorry, the Euro US dollar hourly contract shows nicely the intraday price delivery for Monday, 19 February 2024. The daily profile is an obvious 2 o'clock a.m. New York local time that swept previous day high, buy side liquidity, and price lower. So the low of the day is formed at 10 o'clock a.m. New York local time that priced deep into the hourly inefficiency and also sets the leg for higher prices. So this particular candle is the high of today, which is from 2 o'clock a.m. New York local time, and this one is from 10 o'clock a.m. New York local time. So we could see even though it's a bank holiday, the market still respect time, but the volatility or the amount of pips it offer is very short. But I think I did not. I think there are people that might trade this, but not for me. If there is bank holiday, I don't trade bank holidays. So on the hourly, I'm looking for an expansion lower, and also you can now see that there is an hourly fair value gap from today, which also might be a factor for price uh not to go for price for market not to go lower, or if we make use of it and we sweep this sell side before going higher, that will also make a whole lot of sense. But you should have two. I lay out two different templates. One is that if we did not sweep that new low, we are going to continue like just a little bit, create the low, continue higher, then we're going to have either a massive retracement or a short time retracement before going higher. Why the other one is that if we swept that low and price um into the daily inversion fair value gap, we're going to continue higher prices, which is going to be very impulsive than this one. The first one which is this one, might not be that impulsive than this. This will move faster than this if we sweep that low, right? So that is it. And also we are going to incorporate it with what events do we have tomorrow that is going to bring that in that volatility, and that is going to Because if it's going to bring enough volatility, it's also going to create a fake move, right? I don't want to have that on my chart. It's also going to create a fake move, and which will trigger uninformed traders that price is going lower, and at the end of the day, we end up reversing and pricing higher and pricing or giving us higher price delivery. So let's go to the XY. So this is the XY, and probably you can see what I'm saying, right? So if we price lower before going higher and we take out this sell side, there is a high chance that we might start retracing higher to come here and take out this area, which is going to be very, very impulsive. And also, if we go higher without taking this one, that is, we just consolidate and start pricing higher without taking this one, this leg will be more impulsive. Let me change the color. This leg will be more impulsive than this leg, which is this red one. Will be more impulsive than this red one. Will be more impulsive than this black one. That is, this particular move will be more impulsive, and also it will help to create the low or the high of the week. So for the high of the week or the low of the week to be created, we need to see such move occur in the market. So you need to have your eyes and your perspective on this time frame, and also situate your mind and concentrate on these two templates I have given you. So work with it and you will see profitability tomorrow. So that has bring us to the end of this video for today. So let's see what happens tomorrow, and let's see what happens tomorrow, and let's concentrate more on the what price is showing, not what we think. All right. So that is it. And I'm going to play my mentor video. If yeah, just some talk. If you want to stick around, you can stick around. If you don't want to, you can just end your video here and go on.
And I'm excited for you. I'm excited. I can't wait to really get started. But I've been doing the mentorship. I've been mentoring since the 2nd of January, nonstop. So you're looking for the live sessions that begin February 7th, 2023. And you'll be able to see the charts, not just see tweets me talking about specific things. So the title of this is your blueprint to successful trading. And if you're new, you actually have a unique perspective. That means you have not been tainted with all the things that this industry unfortunately pushes on students, turns them into gamblers most times. And then when they fail, they walk away from the industry thinking that no one's able to do this consistently. And that's unfortunate. But consider your successful trading, your successful endeavor as a trader, much like a home, a new home purchase. And when you're sitting down with someone, maybe you're going to a home builder, and before I moved into the home I'm in now, my wife and I considered going to a builder and having them draw up plans for us and do lots of things. But unfortunately, like you all listening, all around the world, the supply chain has been a major factor in costs. So I went with a existing home. My wife fell in love with it, and it is what it is. I'm happy with it. There's some things I wish it had. But your system is going to always have those things too, even when it's profitable, even when it's a beautiful piece of financial real estate in your life that can generate income. You're always going to have these things that you wish it could just have this amenity, this addition, or it had this type of feature. You know, it could do a better way of exiting. Like for me, my trading, one could argue it's consistent, yes. Sometimes it's highly precise, yes. But my wish about my own system, my own model, is I wish my exits were better. And you're going to have that same thing throughout the year. You're going to wish that you knew more, and the things that you learn, you're going to wish you'd learned sooner. But why waste your time with that?